It'll be just a second, folks. It takes a minute for YouTube to transfer over. All right, and here we go. Just post this here. That there. And we are live. Let me go ahead and get this thing to switch over here. There we go. And here we go. David, Dave, Cam, Assam, Brian, Timothy, Kirk. Good morning, and good morning, everybody. I hope everybody's doing well today. Wow, what a day yesterday on Wall Street. Although I got to say, it wasn't as unpredictable as a lot of folks expected it to be. Hopefully everybody's doing well today. We'll be starting in just a few minutes. Remember, my VIP room today is, today's Thursday. My VIP room is at 11 a.m. And on Thursday, and after my VIP room, I'm going to be talking about cash flow and how you guys can take advantage of cash flow. I'm going to be talking about AVGO, Lowe's, Netflix, NVIDIA. So don't miss out. It's going to be a lot of fun. And Cam is going to be presenting customer service live today. He's actually posting his agenda in the pit, right in the Telegram channel, right? Not in the Telegram channel, in the YouTube channel right now, excuse me. And every day, customer service live from 10 a.m. to 1 p.m. Any question you have, share your screen, talk to professionals. They will help you out every step of the way. Carrie, Rochelle, Jody, Roddy, Greg, Ed, Henry, Dean, Dr. Serena. Good morning, everybody. It's time to start. Now, folks, just FYI, I have an appointment tomorrow. I am taking tomorrow off. I'm not going to be here tomorrow. We will not have a live class tomorrow. I will be on Telegram sporadically if we need to place a trade, or if we need to roll something, or if we need to move something. Matt and I will be around, but we're not going to be around physically. So you will not be getting a notice from me tomorrow about this broadcast. I will not be here tomorrow. So don't send me an email saying, where were you? Is everything okay? Everything's great. I'm just not going to be here tomorrow. I have to go on a business trip to Daytona Beach, which is an hour away. And Matt, he's closing on a land lot, so he has to be in escrow tomorrow. Matt is becoming a land baron. So not going to be here tomorrow. I try never to take days off. I really don't like to take days off because it's a lot of work for me, but I have to take a day off tomorrow. It's just one of those things. Yeah, so today, complete pro trader walkthrough. Man, that sounds fun, Cam. I like that. You know, Cam, if my pro trader dashboard ever gets erased, you're going to be seeing me in there asking you for instructions of how to put it back together. So if it's good enough for me, it's good enough for you. All right, let's begin. Let's talk about everything. We've got a lot to talk about today. I also have something funny for you today. NASDAQ is open, and we're not going to open up. We really don't know what's going to happen today. We really don't. We're going in blind because we have the PPI report and we have a bunch of Fed speakers. The PPI doesn't have as much, Walter, good morning. The PPI does not have as much firepower as the CPI, but the CPI has set the tone. So you remember how I always tell you guys that institutional traders, they don't necessarily have to do a lot. They just have to kind of point the retail trader in the right direction and then let go. Kind of like a domino effect, you know? You kind of walk by, you kind of do this, pow, and then the whole thing just falls apart. Moondog, I'm so sorry that you're in the hospital. I am so sorry. Please keep us updated. And my prayers are with you, and I hope you are okay. I do. I really like you being here. You're a great participant, and I don't want anything bad happening to you. All right. So the big number today, really the only number you need to focus on. I'm going to make it very, very simple for you. And more importantly, we'll probably be here live when it comes out. That's one of the reasons why I do this at 8 o'clock, so we can hang out together and have fun at the 8:30 announcements. But here's the thing. They're already expecting the number, the year-to-year core, the ex-food and energy. They're already expecting the number to be higher. they're already they're already expecting the number to be on the upper end of the range. So the way I'm looking at it, and again, it doesn't have as much firepower, but if this number is 2.3 or 2.2, I don't think it's going to cause the market to bleed because that's already priced in. And I think the market is looking for a reason to rally at these levels. I don't think the market wants to go down too much. I think the market wants to gain some choppiness, consolidate, and decide what it wants to do. That's what my opinion is. Again, you will also see the X food, energy, and trade services. This will be interesting because I really don't know if trade services are picking up at the rate the Fed would assume it's impacting everything like food, energy, and like food and energy are. We know they are for sure, but I don't know if trade services are. But we'll find out today because we sure know that X food and energy. So the number they're looking at is 2.3, which would again tell us that the kid ain't having any fun and he ain't getting that bike. Now, we'll get into all of that in just a few minutes. Then you got the X food and energy. They never tell us what the consensus or the expectation is. They just tell us what the prior is. Obviously, it would be really, really good for this number to be lower than 2.8. That means they're making progress on the at least on the production side. But I don't know if that'll happen. But again, one of the silver linings we have going into today after yesterday's nasty report, and it was pretty nasty because it pulled the rug underneath that stubborn kid, is this number right here. This is the number we want. All this crap, it means nothing. I mean, the headline number means something, but look, last year 1.6, they're looking at 2.3, X food and energy 2.3. So 2.3 is really the target. Anything better than 2.3, we could see a little bit of a rally in the market. But as of right now, the market's been very, very volatile. It's been moving. It's now near the lows of the range. It was near the high of the range. There's a lot of volatility. When markets have a lot of volatility, the best thing to do is not to go crazy. The best thing to do is keep your powder dry and wait to see what happens. And also start looking towards very strong defensive stocks like we put on yesterday in the pit. That's a defensive stock. Those type of stocks tend to move up when markets are in turmoil. Please don't mention the name of that stock here. And we're still holding on to one other stock. But moreover, I'm looking for the market to start consolidating. Now, crude oil yesterday. Crude oil didn't really go down much. It just kind of consolidated near the 8-day EMA. Remember I told you the odds are it's circling right here and it's going to just come right back up. If you look at gold, which we will look at right now, where's my gold? Where's my gold? Metals, here we go. Who moved my gold? You will notice that gold is up today as a result of what's happening in the market. Duzzy, good morning to you. JB, good morning to you. So let's take a quick look here. Let's look at the June contract. This is gold. And I mentioned to you guys that typically when markets go through volatility, you will see more upside in gold. Gold actually did not go down yesterday, and it's already up for the session. So gold prices are not really cooling off that much. And as I mentioned before, energy prices tend to be elevated because there tends to be an inverse correlation between commodity prices and energies. Let me just quickly take a look at this one more time. It's down just 35 ticks today. There's not really much there. 1 second. Let me just go here. Pull this up. Yeah. Also very similar to what we're seeing in gold. Good volume, hugging the 8-day moving average. Nothing really off there. Bond market. Let's look at TLT. Well, we finally had it. The kid finally succumbed yesterday. But did he really? We broke down. As I mentioned, it happened a lot earlier. Here, let me change this template. It happened a lot earlier than I expected. I thought it was going to happen somewhere around here. It already happened. It broke down earlier than I thought. So now we're going to see what the kid's thinking. Because if the kid's thinking, and by the way, notice lower bonds, higher rates. We don't have any support here. Have you noticed I haven't been? And look, institutions, they tried buying here. They tried buying here. They tried buying here. They tried buying here. 4 times. 4 times. Institution. Oh, Duzzy, if you think I'm not going to be all over that today, you're sadly mistaken. Just give me a second. So look how many times they thought that the market was going to go up, that interest rates were going to go down. Right here around December, interest rates are going to go down in March. Do you remember me laughing? I was laughing at that. Interest rates are going to go down in March. No, they're not. Interest rates are going to go down in June. No, they're not. Interest rates are going to go down in June. No, they're not. Maybe interest rates will be going up in June. No, but the point is, this is negative. This is very bad, and that's telling us that interest rates are going higher, not lower. All right. Don't worry, Duzzy. We'll get there. We'll get there. So be careful and watch this carefully. If you see this coming back up, that's going to give the market some relief, especially after the PPI comes out today. If you see this coming back down, then it's going to take away that from the market, especially from blue chips. And if you noticed, yesterday blue chips were struggling worse than tech stocks, which is pretty typical because financial stocks are impacted, although they bounced pretty good. And you could see here right now that we're already trading a little bit lower, but we're back in the range. It's very common for the market before going higher to break the low and then go higher. That's very common. Back in the day, we didn't have that. Now, very common. Look at here. Breaks the low, then goes higher. Look at right here. Breaks the low and goes higher. Breaks the low and then goes down. But again, it happens all the time. But I don't want you guys to use the bond market or the Fed as a gauge because institutions tried once, twice, 3 times, 4 times. Finally, they said, hell with it. But look at how many times they were wrong. Were we telling you guys that interest rates are going down anytime during this period of time? Not we, I don't know who we is. I was telling you the kid ain't getting that bike. Here, and there. So don't follow institutions because institutions don't always have it right. They've been wrong the entire year so far. All right, now we get to the good stuff. So before we get into all of this, I want to read something to you. Now, I don't know this guy, and this guy doesn't know me, but you guys know my analogy, right? The kid with the bike, right? I sent this to Cam this morning. I thought this was so funny. Just to show you how my analogy in real life, and tell me if this sounds remotely to my bike analogy. Inflation right now is like a stubborn child that refuses to heed the parents' call to leave the playground. 2 cuts are now likely the base case. As a result, investors should be prepared for a higher for longer monetary regime. Does that sound anything remotely similar to tantrum, the bike, the kid not getting his bike? How long have I been giving you that analogy for? I'm just curious. How long have I been giving you that analogy for now? For months. They now started using that same analogy. Stubborn child. So somebody asked me what the odds are now. Well, do you guys remember the odds were at 50% and I was laughing? And I mean laughing. We went from 50% to 16%. Now, out of curiosity, and I'll go through this again, the whole thing, but out of curiosity, how many times did I say, for how many months have I been saying this? So I'm going to ask you an interesting question. How efficient do you think the markets really are? No, Jack, I'm not. I just have I've been doing this for a long time, but I've been at this like white on rice. From 50 to 16% in one day. And I was very adamant about this. I didn't have I didn't have like a little, well, maybe we'll see. No. I had a very strong opinion about this. So someone asked me, what are the odds that the Fed is going to lower rates in June? 16.5%. 16.5%. Sounds about right. We're getting close. Now, what does that mean for the bond market? That means the bond market is close to where it should be. And if that's the case, then we really have now listen carefully what I'm about to say. If that's the case, and if we really are, and this, by the way, this is going to be the most important thing you're going to hear today. Did that video link help? No, yeah, anyway, sorry about that, Cam. I thought it was for me. So this is based not what the Fed is saying. This is based on what the market is doing. So this is very accurate. You can't argue with this. You can argue with anybody, but you can't argue with this because this is implied from the price of the bond market. So exactly, Greg. So anybody tells you that markets are efficient and they price everything in immediately, tell them about how long we've been talking about this. And by the way, the bond market is supposed to be 100 times more efficient than any stock or any, because it's a much bigger market and it's a lot more efficient and it has a lot less volatility. Rebecca, good morning. So the odds are now at 16.5%. Well, why is this important? Why am I spending so much time on this? Well, I'll tell you why. Because that actually sounds. Now, do I think they're going to, do I really think there's a 16% chance of them cutting in June? I actually think there's more like a 2% chance. But that's a lot more in line with expectations, which means the market is a lot closer to fair value than it was 2 weeks ago, which means we shouldn't have too many more surprises because look, if the market gets more negative, okay, this will go to 5%. All right, then where it's going to go? It's already at 16.5. So in my opinion, where the market is right now is a lot closer. Well, Biden said January, February. That's what Biden said. But who listens to Biden, right? But anyway, 16.5% is a lot better than 50%. So now, does the kid think he's going to get that bike this year? He still thinks 16.5%. So he's definitely now making plans for that skateboard. I think so too, Walter. I think so too. So, but now here's where we get into a gray area. He thinks there's only a 16.5% chance he's going to get that damn bike in June. If you ask the kid whether he thinks he's going to get that bike by the end of the year, he's going to say, of course I am. He's a stubborn child, right? He wants that bike. So what we now need to see, is we need to see this go a little bit lower, maybe about 6%. And the odds of, and I don't know what the, sometimes they post it here, like odds are 16% of June, and then in October the odds are 40 or 50. I don't know what they are right now, but what I'd like to see is if the odds of a rate hike, what I think will get us right on target, and I think we're close now. I think this being at 10% maybe, and I'm just roughing it out, and then October at 35 to 40%. That would bring the market more to a realistic expectation. Now, I'm giving you guys real numbers and real data. So let's now go through all of this. So NASDAQ was down this morning. Further losses. Inflation data diminishes hopes of early interest rate cut by the Federal Reserve. We're waiting for U.S. Producers Price Index, and we're waiting for interest rate announcement on European Central Bank. That's going to be important too. Minutes from the meeting revealed that almost all officials judged that would be appropriate to commence reducing borrowing costs at some point this year. What are we all saying? October, November. I don't know what the timing there is, but somewhere around October, November, maybe. Basically, the last quarter. At the same time, policymakers discussed the possibility of maintaining the current restrictive policy stance for longer should the disinflation process slow, and it has. Some Fed officials warned that recent increase in inflation has been relatively broad-based and therefore should not be discounted as merely aberrations. Let's see, is it going to erase my? Nope, it didn't erase it. Good. In addition, the minutes indicate the Fed officials generally favored slowing the pace at which they are shrinking the portfolio by approximately half. So it's right there. Oh, you're welcome, Angie. You're welcome. So the benchmark S&P dropped to a 3-week low. The Dow fell almost to a 2-month low. As you could see here, the Dow is, 1 3/4 month low is a lot worse than a 3-week low. So the Dow's definitely slumping it. Decker slumped, not good for home repair type of stores. Very, very bad. Chip stocks actually slid as well, but Nvidia got upgraded, which is I think going to help chips today. Again, I'm going to read this. Inflation is like a stubborn child. I wonder where he got that from. 16.5%, a lot closer to reality. Uh, I think so, Doozy. I think so. I don't know if I'm pronouncing your name right. Is it Duzzy or Doozy? So I apologize. PPI is coming out in 9 minutes. Core PPI, I told you this is the only number that really matters. Jobless claims is not going to be anything we even care about or I even talk about because it's been around 220,000 now for however long. We do have Fed speakers, but remember, the more this number, it's very hard right now in 24 hours to go from 50%, or I think it was 50 yesterday or 48, something like that, to 16%, and then say something that's going to, I mean, I think this took the air out of anything that they're going to be saying in the next few days. I think the market has to get used to this number. Okay. Um, I think they're just shucking responsibility using the child metaphor. Yeah, probably. Europe is down a little bit. Investors are being careful because of Christine Lagarde's remarks about interest rates. Telecom and bank stocks underperformed while energy stocks gained ground. Investors now turn focus to the interest rate decision that's due later today. They're going to expect to leave rates alone for the fifth straight time. China is giving us a little tailwind, which can be very helpful to us right now. Auto and semiconductor stocks outperformed Thursday while healthcare stocks lost ground. Uh, Data released by National Bureau of Statistics on Thursday revealed that consumer inflation cooled sharply in March. This is going to help gambling stocks. While industrial producer prices continues to slump, highlighting deflationary pressure that poses a key threat to the economy's rebound. Yeah, they have deflation, we have inflation. Japan Nikkei closed lower today, tracking US. They do that very often. They got losses in real estate, technology, healthcare stocks. Japan's 10-year bond yield climbed to the highest level since November. Does that sound like remind you of anything? Tracking a surge in US Treasury yield following higher than expected US inflation data. Wow. Whew. And the Japanese yen traded little or weakening to a level not observed since 1990. They really need to raise their rates. We got earnings today in Constellation Brands, Fast, and CarMax. I showed you earlier this week that the only one where I'm expecting where you may want to do a straddle is CarMax. CarMax looks like it can be explosive. I don't know if this comes out in the morning. If it is, then it's too late, or in the afternoon. But STZ is pretty impactful, and KMZ will be impact used cars. Fast, um, more of a software company. Okay. Wanted to also show you something else real quick. As far as the RSI is concerned, we are here. Let me just change this. The bond market, the RSI. Let me change this to a 5-day. 5-day is becoming a little bit oversold here. And if we look at the stock market, which isn't really down all too much today, you could see that the RSI is making a lower low here and making a higher high here, which is divergence, which probably tells us we're going to be staying in this range for a while or bouncing at least for a day or two from here. Let's look at the chart we look at every day. So we're in the doghouse now. Remember I said usually if we break this area, we tend to traverse all the way to the other side. We're now in the doghouse, and I mentioned this area is quite big. The next level up would be 508, 509. The RSI is moving pretty hard over here, these areas. And usually when the RSI gets oversold, we tend to bounce. So I am looking for a little bit of a bounce in the short term. This is a daily chart, intraday chart, hourly charts. I am looking for a bounce. And again, we went just as low here yesterday, but the RSI couldn't go lower, which is telling us there's a divergence. And usually when you have a divergence, things tend to come back up. Now, the question is not going to be whether we come up. The question is going to be, the odds are we're going to come up to 517. The odds are we going to pass that level and come back into this area, or are we going to stay in this area today? Unless the PPI is really nasty, we're going to stay in this area unless it's really nasty. But we may come into this area. So the numbers you want to look at today would be 517.50 and 508. And again, don't, 508, 20, 508. I'm just round balling them to you. They don't have they're not for entries and exits. Looking at the QQQ, Again, we're also in the doghouse here, and the level we need to look at right now, the RSI couldn't even get to oversold yesterday, and while it went to this level, so it bounced off pretty good. Yesterday, basically, we went down pre-open, and then the entire session we just stayed sideways. We really didn't do anything, which is actually a good thing that we didn't drop after the session opened, because then the market was rebalancing and adjusting to the current economic levels. So the market right now, as we speak, is in fact pricing in that there's only a 16% chance that the Fed is going to lower rates in June. Finally, I feel like I'm not talking to somebody in outer space on that. Let's look at the Dow real quick, and then we'll get into. All right, the Dow broke down. We are now at a breakdown on the Dow. We are now below key levels. We're going to have to draw some more levels down here. I don't have anything here except this line right here. Just draw this right here. We are now at this level right here. So we are now, the question is, are we going to go trade above the 38,500 level or 400 something level, or are we going to be breaking down? I'm hoping that we're going to come up here so we go back into this trading range. But the Dow and the blue chips, mostly financials, are not liking the news for obvious reasons, although we did see a pretty good rebound yesterday. So those are the levels. Now let's look at sectors. Actually, 90-day breakouts. Today's the first time we have something different. We have 57 stocks making 90-day highs, and we're seeing 144 stocks making 90-day lows. Quite different. Remember, I told you about a week ago, a week and a half ago, while this was still inverse to this, and I was telling you how a lot of big name stocks like Lulu, Nike, Starbucks, Intel, Johnson Johnson, Guild, BB, how they're all starting to show up here. Well, remember what I told you that usually means? That usually means we're going to have a nice little downside whack, which is one of the reasons why I've been so cautious putting trades in the pit and taking them off so fast, because things are happening quickly right now. And if I'm holding stocks, I'm only going to hold the best stocks there. So you could see the dynamic. Now, does this mean anything? No, it doesn't. Does this mean that we're going to, no. If this is below 400, 450, it just doesn't mean anything. But what about the fact that it's 3 times less than this? No, it doesn't mean anything. It's just randomness. When do the numbers indicate too negative? When you see this going, when you see this number going into the 400s, from 150, 200 to 445, 450, that's when it's too much. If the market wanted to go down right now, it has plenty of market breadth. That's not really the issue. My biggest concern to the market downside right now is whether the market believes. My whole beef was this: if the market is pricing in a 50% chance that interest rates are going to go down in June, and they're not going to go down in June, the market has to accept that. And I think yesterday the market did a really good job of accepting it, because notice, after we opened yesterday, look, it's important to talk about this, because after we opened yesterday, the market really, this is pre-open. This is 8:30 in the morning yesterday, right here. Here. So this is 8:30 in the morning. What did the market do the entire day? This. So the market pretty much priced in, as well as it could, the fact that rates, that there's basically the kid's like, okay, I believe you that I'm probably, more likely than not, I'm not getting that bike in June, but the year's not over. So he's still hoping. And here's the thing: the fact that interest rates are going to go lower is still a dangling carrot in front of that kid. And while it happens, I don't think the market's going to go much lower. I think the market's going to get used to this level, see how it feels at this level, and then have more price discovery later. That's assuming the PPI doesn't change what I'm saying right now. Right. Not, I don't think everybody believes so differently. I think it's the market. I think you have a lot of very young institutional traders who've never seen, who are just too optimistic. That's my opinion. All right. So, oh yeah, let me know when the PPI comes out. I'll look at it over here. All right. Let's see here. Well, the market just rallied. The Nasdaq is rallying really hard right now. Look. That's the QQQ. If the TLT is going up, if TLT is going up, that's very good for us. But here's all you need to know. So the report obviously came out really well. Yeah, Dr. Serena, 318 watching. Look at that. Look at that. This is really good for the market. Oh, 2.1. Really? Oh, that's good. That's good. That's great. This is good. This is good. This is good. This is really good. So far, so good. Let's see what this number is going to be. But this is good. This is better than expected. So you can see here, the NASDAQ likes this number. All right, let's continue, shall we? Well, actually, let's look at the bond market while we're already here. Oh, yeah. Look at the daily on the bond. See how the bond market is on the daily chart, how it's starting to come up right here? So if we come right back here, the odds are it'll pull the market higher. I don't care about jobless claims. Let me give you an example, and it's worth talking about this. Oops. I want to just quickly show you something. This number, I'm not kidding. For the last 3 years, this number has been between 200 and 220,000. You know how they say the VIX is dead? This is dead. Speaking of VIX, that's the last thing I wanted to go through with you guys today. There was something I wanted to say about the VIX, but I didn't get a chance before the report came out. So what I wanted to say was that VIX never went up. VIX yesterday never went above the high that it made last Thursday. Remember last Thursday when the market broke down? Well, volatility is very important. And we did not, even though price broke down on the SPY, volatility did not. That was a very, very big clue that the market does not want to go lower. I'm just throwing that out at you right now, okay? That was a very, very big sign to the market because volatility did not break. I wanted to tell you this before the report came out today, but that was a very strong sign. If you see volatility breaking up here, we're probably going to go up to 20 or something like this. But the fact that we couldn't break Thursday's low when the market gave us the warning shots, we all talked about here's the warning shots. Let me show you the warning shots. See this warning shot right here? See how the market broke lower yesterday, right? And that's this day right here. VIX couldn't go higher. VIX couldn't go higher. And RSI, by the way, is diverging, which is another strong sign. But anyway, just wanted to tell you that's a very, very strong sign. Let's just take one quick look at the NASDAQ again. Look at the bond market. Whoop, that's very positive. QQQ, still going up. Oh my, look at Google. Google's moving up. Everything's moving up. All right. Let's now talk about stocks. I think I'm giving you guys a really, really good I don't think what did Turkey says? I don't think year over year is the only thing that matters. Turnkey trading year over year is the only thing that matters. Nobody cares about month to month. Nobody cares about month to month. So the only thing we care about is year to year. So let's see if the whole thing is now filled in. Sorry, I'm taking a little longer today, but I want to, I figure since we're all here, we can kind of take this apart. Okay, 2.8, not worse. 2.2, X food and energy, 2.4. That's not good. But the whole number is better. So this is not great, but overall, it's not bad. It's not bad. Not bad at all. Not bad at all. Okay. So it's causing the market to rally a little bit from what I could see here, at least the futures market. Now let's what about the Dow? Anyways, let's not talk about our stocks. We'll talk about all this other stuff later. So looking at the sectors, still a bunch of nonsense. Look, energy, consumer staples, utilities, okay, that they work. This works industrial, but what the hell is QQQ and consumer discretionary doing here? And what's communication services doing here? Uh-uh. And then you got the S&P 500 and technology. Technology should be next to communication services and consumer discretionary and technology. But you got basic material between semiconductor and technology, and you have industrial between consumer discretionary and QQQ. I mean, I can go on, but this is really out of whack. Dow Jones is down here next to mid caps. Really? Really? And then you have financials and the Russell and then retail home builders. Well, this could work, but it's it's bad. It's very, very bad. So this is telling us we really, really, really need to we really need to watch the market, and we can see a lot more consolidation. But yes, folks, all these numbers, I don't even know what the month to months are. I don't even look at them. I only care year to year. The fact that X food, energy, and trade services it hasn't changed is positive, but this is bad right here. 2.4, they were expecting 2.3. That's bad. That's going to put a hamper on things, but not as bad of a hamper. Let's see how the Dow's doing on based on this. Nothing. Let's see how we're on the real time. Yeah, the Dow's still moving up. Look. Nice little bump right there. All right. Okay, so now let's talk about stocks. All right, I'll make it quick. Get your pen and paper out. Let's get into all the good stuff. I'll give you the short side first, okay? Boeing. I know it's the first time I'm talking about it. We've never talked about Boeing before. Intel. Look at Intel. Mm-mm-mm. Guild. Visi. This is a new one on my list. Really, I'm not being sarcastic. This is a new one on my list. Big breakdown yesterday. Nasty, nasty, nasty. Look at that big breakdown yesterday. Look at volume. How many times have I brought this stock up in the last 3 months here on this show or 2 months here on this show? Johnson Johnson talked about the stock yesterday. Not good. Definitely going to look to short the stock. Z at one point or another. Zillow Group breakdown with interest rates staying higher for longer. Very, very makes perfect sense actually for once. Tech company breaking the 200-day moving average. Not the worst thing in the world. Electronic Arts. Wasn't Ross Perot associated with this company ages ago? Breaking the 200 here. KNX. This is an interesting transport company. Be careful with this one. I'd like to see a little more purposeful breakdown. And ACN. And I got two more. Oh, looks like a beauty right here. And you got your stop right here. Capri. Oh man, look at that. Long time ago, long time ago. And that's the last one on my short list. Now, I really like most of these. There was one I gave you that was a little iffy, but I like the rest of them. Now, let me give you the long side. I gave you this one before, still going up. I still like Amazon. I think people will still keep shopping at Amazon. I told you about this stock, this commodity ETF a few days ago. Uh, Still beautiful. I like metals right now. Adam, that stock that I gave you guys in the pit, please don't mention the name, but it's very similar to that XME ETF that I talked about. It has like a lot of exposure to metal. You know what I'm talking about. Anyone in the pit knows what I'm talking about. Metal company. Now, here's an interesting one. CVX. Now, I'm going to talk about CVX and I'm going to give you Exxon. Now, why am I giving you the same companies? Because they're doing exactly the same thing. And I'm really hoping you're not going to buy both of them. You're just going to pick the best one since they're literally identical. Um, FSLR, still going higher. BJ's, look at that. That looks fantastic. TKO, it's a wrestling stock. Good, 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 good. I'm glad to hear that. I haven't looked at it yet this morning. DPZ, Domino's Pizza. We talked about this one several times. I mean several times. And last but not least, CMI. All right. Now, folks, remember something that today I'm going to be doing a VIP room at 11 a.m., not at noon, at 11 a.m. because it's Thursday. And then I'm going to do a class, a very special class on income at noon. And I'll actually give you guys a couple of samples. Yesterday, I went over the class, but I didn't give you a couple of samples. Today, I'm actually going to give you a couple of samples. And more likely than not, I'm going to initiate a new trade. So, and we may or may not have to roll an existing one. I don't know. We will see what happens on the market today. Overall, the report was okay. The only fly in the ointment was this right here. But this kind of confirmed what we saw yesterday in the CPI. So I don't think it's going to have a negative impact. And if we look at the market right now, just real quickly, we really went up pretty hard, but we didn't sell off yet, which is good. The bond market came up, didn't really sell off yet. QQQ went up quite a bit, didn't really sell off yet. So I'm liking what I'm seeing right now. If there's something I didn't cover, please email me at, here's my email address, roger@rogerscott.com. Cam White is going to have customer service live today from 10 to 1. If you have a customer service question, please, please, please go there. He will help you out 100 times better than I will. If I had a customer service question, I'd go to him. So don't go to me, go to him. Let's see how the QQQ shakes out and whether we erase all these gains pre-open or whether the market supports them. But the fact that we rallied on this report pre-open is a very positive sign so far. I am not going to be here tomorrow. You are not going to get me tomorrow live. I will not be here tomorrow. I'm just letting you all know that right now, okay? So don't worry, I'm fine. I just have something I really need to take care of, and it's an hour away, and it's going to take me a whole day. So I will see you guys on Monday. I will be using Telegram incessantly. I will respond to your emails. I will be around for you, but I may not be here live. I'll see you guys later. Have a fantastic day, and please let me know how things are going and if these morning sessions are helping you. Roger@rogerscott.com. Bye, everyone.